All right, hey everyone, Mark here. Just in my microphone. Let's see, there we go. You guys should be able to hear me all right. All right, let me put this over here. Okay, great. Hey everyone, Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis session. I usually stream on Mondays, but yesterday was a holiday. All right, how's the sound? How's the sound? Can you guys hear me okay? I made some adjustments with my microphone, so maybe my sound is better. So, hey, Savi, how are you? So today is Tuesday, and again, I'm streaming around the same time, but typically my streaming time is Monday. So I haven't changed anything. It's just yesterday was a holiday. All right, so let's move along. If you're new to the stream, welcome. Let me explain to you very quickly how this works. So first thing I'm going to do is I'm going to run through the economic calendar very quickly. Then we're going to talk about this Bitcoin chart to give you some extra perspective on what's likely to follow this week, coming after my trading view analysis that I published on Sunday, which you can see the illustration here was pointing out this move. And then we're going to look for trade signals with the Trade Scanner Pro. Now, this is not the best time of day to be looking for trade signals, but I usually can find some interesting examples on smaller time frames to illustrate how the Trade Scanner Pro works. So we'll get into that. All right, so that's how the stream works. If you'd like to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as northern New Jersey, and the weather sucks. All right, I'm just going to let you know that. All right, so with that said, let's get started. Let me pull up my slide. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Savi, how's my sound? Is my sound a little bit better than usual, or is it the same? All right. So, and anyone else, feel free to ask questions or say hello. This is a good time to ask questions about stuff. I'm mostly going to cover Bitcoin here, but if you have a question about something, I'll try to fit it in. All right. So first thing I want to talk about is the economic calendar. It's not a very busy week in terms of economic news. It's important to be aware of what news is on the calendar because it can affect things, whether it's in Bitcoin, whether it's in a stock, whether it's in whatever. Okay, echoes a little bit. Okay, cool, Savi, thanks. Yeah, that's the room. That I have to work on that, but that's the acoustics of the room here. That's why you hear some of that reverb. So yeah, I got to fix that. All right, hey, no problem, no problem. Thanks for the feedback. Okay. Please remember to talk about XRP. All right, I'll see if I can get some XRP in there. By the way, with those altcoins, well-known ones like XRP, they're going to be typical. They're going to typically follow Bitcoin. So my Bitcoin analysis will be relevant to XRP. All right, just so you know. Hey, Hussein, how are you? Thanks, and thank you guys for joining me today on a Tuesday. All right, so let's talk about that economic calendar real quick, because again, you want to be aware of anything that's important that can affect what you trade, especially intraday. Now, this week, like I said, there wasn't a whole lot on the list. I saw that on Wednesday, we had for the British pound, we had their CPI, which again can affect pound crosses. So if you trade Forex, there could be some effects there because CPI is typically an important number, especially for the US. But we had that one the week before. Also, we have the FOMC meeting minutes. That usually comes out at 2 p.m. Eastern time, and that's on Wednesday, which is tomorrow. Even though we know what the FOMC meeting was about, sometimes there's a surprise in the minutes, or there was something that was unexpected or whatever, and the market can move on that. So just be aware of that. It's not the same as an FOMC meeting, but it can have an effect. Carpet or rugs on the floors will take care of. Yes, I know. I appreciate the feedback there. Yeah, there's a few things I could do to help the acoustics of the room, and also, I mean, I've seen other people using this particular microphone because I watch a lot of videos, and I see they get some really good sound out of it. So it depends on like the microphone mode, which I'm probably not in the best mode, and it's not positioned the best way. But also, yeah, there's some acoustic things I could do in the room as well. So trust me, I'll be working on that. I know I say that all the time and nothing ever changes here, but I'm working on it. It's a slow process because I have a lot of other things that, on my plate as well. But I appreciate all the feedback and I do take it seriously. All right, so back to the economic calendar. So we have that on Wednesday, right? The FOMC meeting minutes. And then there was really nothing that special. There was some European stuff. I saw stuff coming out of other countries. I saw some Fed governors or some head of bankers speaking, central bankers. Again, nothing major there. And then I saw on Friday there was the U.S. has a PMI number, like a services PMI number. I don't know what the timestamp is on that. That's usually not a major deal, so I wouldn't worry too much about that one. And then I saw, I think it was on Saturday, or maybe it was on Friday also, Germany is having their federal election. That could be interesting for the euro, since Germany is the largest, the largest economic power, whatever, in that group. So, and I'm not familiar with the German politics, right? I saw something about how the U.S. is trying to affect the outcome. What else is new? But I'm not familiar with German politics, so I don't know even how to gauge that. But it can affect euro crosses. If you trade euro or if you trade European stocks, it can have an effect because Germany is a big economy for the European Union. All right, so just wanted to mention that. Okay. Hey, go forth and multiply. How are you? All right, good to see you. All right, yes, I'm still bald, pale, and handsome, right? And he's a guy that always says that. I'm still pale, I know. But it's winter. What do you expect? There's no sun. All right. So let's move along here and let's talk about the Bitcoin chart. So enough of my big head. Let's make my head smaller. I'm going to click on this over here, and we're going to take a look at these charts. All right, so I'm going to expand this chart here. This is the daily time frame. And this is the chart that I use for my TradingView analysis that I publish every Sunday. And as you can see here on this chart, this was the illustration that I published on Sunday, right? So I was basically anticipating pullback and bounce. Well, it looks like we're getting the pullback leg. And this arrow up here is just basically referring to the resistance, the minor resistance, which was the 99K area in this tight little consolidation that we've been in for a number of weeks. Here, let me just highlight that. Right, this is the consolidation we have been in for a number of weeks. Very hard to trade this. Oh, my microphone is like in the way here. Hold on. Let me push that away over here. All right, that should be a little bit better. See, I was trying to like improve the sound by moving the microphone around, but I don't like the way the microphone looks. All right, I'm gonna have to put it over here. So anyway, so you guys know where I'm coming from with this, right? There are situations where it's best to avoid, especially if you're on larger time frames here. This can be very tricky. U.S. is trying to interfere. What else is new? I saw something about it. I don't read too much into that, but you know how it is. So yeah, this is a tough spot. This is a tough environment. And my point of my article that I wrote, because there wasn't much to say about this. I mean, it's a range, okay? It's a tight range, and you can get thrown off a lot in here, especially if you have opinions, if you react to other people's things. People get overexcited about nothing, right? And it's very easy to get caught on the wrong side. And if you get caught on the wrong side, you can be stuck in something like this. So when you're in these tight consolidations, especially as a swing trader, it's usually best to step away. And even as a swing trader, especially, you want to wait for relevant levels to begin with. There's no relevant level really inside of this consolidation. As a day trader, yes, there's a lot of action. There are a lot of things that you could do inside of that range. But we have now broken, or basically we're at the bottom portion of that range. We're basically at the extreme boundary there, and this candle does not look very supportive. So this candle, if this candle, daily candle, closes like this, and the next candle is not green, we don't get like a green inside bar like this bounce implies here, then this thing is likely to break lower. If we break, if we close weak, next candle opens and breaks below this daily low, we're likely that opens up the possibility of moving lower into this zone. Now, that can be helpful for day trades, but as far as swing trades go, there's really not a whole lot to do here. Stepping in front of this is extremely risky because there may be a catalyst behind this. Because again, I don't follow the news. News is mostly nonsense, and it's reflected in the charts anyway. So that's why I don't follow it. I look at charts, I look at levels. That's what I follow. And because I simplify my decision-making process to only two components, I'm able to make much better decisions based on actual market information, not filtered or not processed market information like news. So this zone, this blue rectangle or purple rectangle that I have drawn on my chart, that's a broad support zone between basically 94K and 90K. So it's an area where I'm interested in longs as a swing trader, but I'm not going to step in front because I need to see, if I'm going to get long, I need to see something that supports the idea, like a bullish pin bar. I mean, look at this. Look at all the activity in this zone going back. Look at all these tails on these candles. On smaller time frames, like a 4-hour chart, there are most likely confirmations there. You can use a 4-hour chart to confirm a daily move. That's within reason. In fact, let's take a quick look. Go to a 4-hour chart. I mean, even here on this 4-hour chart, there's really nothing attractive here. Yes, we're at a nice location. We have an inside bar, but that's it. Like this does not justify taking risk just yet on this swing trade time frame. And also, this is why we have something like the Trade Scanner Pro to help confirm these situations, which we'll talk about in a bit. But right now, so all we have here is this. Just to sum this up, we have an attractive location, but we have no confirmation. So I would suggest waiting on the sidelines if you're looking for swing trades for a confirmation. And you can use the 4-hour as your reference point. At least wait for a pin bar, at least a bullish inside bar and a break of the high of that bar. Something bullish. There's nothing bullish here yet. All right, that's sort of an aggressive entry, because really the more ideal thing to wait for is some sort of structure to develop. Right now, we can argue, and let me draw a line here. We can argue that this pattern that I'm highlighting here, this pattern is a structure. Okay, it's a failed low structure. We can argue that. We need confirmation. So that is something nice to see as far as long arguments go. But one other form of confirmation you can wait for if you're interested in a long, here I'll just draw, I'll use the arrow, is at least wait for a break of the midpoint of this large candle. At least something. It should be green, right? A green candle that's breaking above the midpoint. Something. It's better than nothing. You're not going to get the best price. Now, trying to get the best price, you may say, well, if you think it's going to go higher, why not buy it here? This is a great price, because this momentum may stay intact and I may buy something that breaks. And if that's the case, it can keep going. I don't know how far this thing can go. Am I willing to take pain till 90K? I mean, sure, I could step in now and just put a stop and hope for the best. But the probability, there's really no way to gauge the probability if this thing is really going to go my way or not. That's why I'd rather wait for other buyers to step in and give up the best price for at least a trade that is more likely to go my way. I know it's a very hard balance. Some people would rather just step in front, and stepping in front will always give you better prices. But when it doesn't work, you're going to take a lot of losses, right? And you're going to get, and especially if you don't use a stop, you're going to get caught. Trust me, I've done it. All right. So stepping in front works until it doesn't work. And you don't know when it's not going to work. You don't know when that catalyst comes out, surprises everyone, and then this thing just breaks. And if this thing breaks 90K, that's a major support level. I know 89K is the low of this thing, but if 90K is cleared again, you're likely to test 89, and we may even see the mid 85s. Again, I don't forecast the market. The market has to prove things to me. And then based on what it proves, I can gauge new probabilities. That is what I do. That is why I'm often right. I'm not always right with my TradingView articles, but I'm right pretty often. Now, I'm not trying to be right. I know that may sound strange. I'm not aiming to be right. All I'm doing is measuring probabilities of one outcome versus the other. And if one outcome looks more probable than the other, that's the one that I talk about. Right? That's the one that I'm focusing on. And that's what I do. And those probabilities are derived from trend and support and resistance levels. That's it. That's where I derive it from. Now, I know I have a lot of experience, and it's not as easy for a beginner to come up with some sort of idea of which way the market can go based on such simplistic components. But as you get better, as you gain experience over time, you will realize that less is more. That's how this game works. More is not better in this game. And there's so much stuff out there to bait you into believing more is better and complexity is better, that appeals to your human nature. And usually those things are out there to extract money from you. And a lot of people are so ignorant today that they don't even realize that's happening. And I can't help you with that. I try to tell people and no one wants to hear it. So, all right, I'm not going to get into any rants here. All right, so you guys understand what's going on with Bitcoin? You guys have any questions about that? Now, everything I just said about Bitcoin, you can apply to XRP. Let's pull up XRP. So XRP USD. All right, can I get that? Yeah. So here's XRP. All right, the spot market here. And it's not exactly like Bitcoin, but it's similar. And Bitcoin has an effect. As you can see, Bitcoin is pulling back, right? And Bitcoin's pulling back into a support zone. XRP is showing us some red candles. All right, so it's being affected. It's just the chart pattern is not the same. Now, keep in mind, XRP has its own particular catalysts. And there was that court case going on with Gary Gensler and all that other stuff. And Trump won the election, and then you had this because he's we're going to be the Bitcoin capital of the world, the blah 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 blah, right? So and he put he's replacing the head of the SEC with a Bitcoin friendly guy or something. I don't know. Again, I don't pay much attention to news, but you had this. And I'm sure some people made some nice money with that. Now, if you were not long at 30 cents, which XRP was at 30 cents forever. I remember people asking me about XRP. Oh, is this ever going to go higher? And I remember it was like 30 cents, 40 cents, 30 cents. That was it. Like that was the price. Now you're playing the game with everyone else. Like now is really not a good time for XRP, in my opinion. And this is not the best thing to day trade. But look, I'll give you my take on what the chart says. You have support over here. The trend is bullish. Okay, clearly we're in a consolidation now. This is a huge breakout. You have a higher low consolidation, basically transpiring right now. That's what this is. A higher low consolidation. You have a lower high that's established now. That doesn't necessarily mean the trend has changed. It just means that this thing is not making new highs. So there's a change in momentum, and we have to anticipate that this range will stay intact unless it does not. So your key level on this thing right now, especially if you're looking for investing, you're looking at what, 195, something like that. This thing right now is at 249. So this thing has some room, and that would be your most attractive level, 195 or maybe around $2. I don't know if this pin bar over here, I don't know if that's a bad tick or if that's real, but that's your support level, and that's what you should be waiting for. Anything besides that, you're asking for trouble, because in these ranges, especially the midpoint of the range, which is around here, something like that, maybe a little higher, it's going to be the most random area. Anything can happen inside that area. So it's really not worth taking any trades. And again, as far as XRP, I wouldn't day trade this. Swing trades possibly at particular levels. I mean, let's take a look. What are the daily ranges like? Let's see. This range here is 266 is the high. 20 cents. This is 20 cents, right? This one candle is 20 cents. So I mean, to make money with this, you have to trade gigantic, because 20 cents for the entire day, man. So that's not exactly a good day trader choice. Whereas something like Bitcoin, a lot of movement. Something like Ethereum, there's some movement in there, right? You want things that can actually move. Anyway, so something like this would be more for a swing trader or an investor. And those are my levels that I would suggest. That 195, $2 area is the only thing to really look at. Otherwise, you look at the resistance right there. And I don't think you want to short XRP, especially since so many people are into this thing, and it's very sensitive to that court drama stuff. All right, so that's XRP. Now, any questions about that? Let me know. Let's go back to Bitcoin. Now, I'm going to change this chart. I'm going to go to Bitcoin. Change this here. Bitcoin perp. All right. Reset all filters. Okay. And I want the MEXC. All right. So I'm going to the Bitcoin perpetual futures chart. Right. And I'm going to change this to an hourly chart. So let me, guys, let me know if you have any questions. And yeah, and if you like the video, you like the content, don't forget to like and subscribe. That always helps. Trust me, I'm working on stuff, and it just takes me a while. But I'm not going to go into that rant either. If you just be patient with me, I'll get there with the better quality stuff. Because trust me, I see what's out there. I spend a lot of time watching fake gurus, and I take a lot of notes, the kind of backgrounds, the sound quality, what they present, all kinds of stuff. So trust me, I'm aware of how behind I am. Believe me. All right. So we have the 1 hour here, and I'm going to switch this chart on the right-hand side to a 1 minute chart, right? First, I'm going to do that. Then on my hourly, I'm going to turn, actually, before I turn on the Trade Scanner Pro, let me explain a few things. Now, I'm going to get into the Trade Scanner Pro section of the stream where I look for trade ideas. I'm not going to explain how the Trade Scanner Pro works. There is a link in the description that explains all that. It's the first link, so if you want to take the time to watch that video, please go ahead. Now, the Trade Scanner Pro is best used, especially for beginners, on larger time frames. But before you can even get to using the Trade Scanner Pro, you have to understand what you're looking for. You have to come to the market with an idea. The Trade Scanner Pro is not a forecasting tool. It's a confirmation and management tool. So in this stream, what I do is I demonstrate how you come up with an idea to trade. It's not that hard. Now, it requires, though, that first you have to know what type of trade you're interested in taking. This you must decide before you even turn on your chart. You should know if you're a day trader or a swing trader. You must know this. If you're confused and if you're using the market to try to decide which one, that's wrong. You decide first. Then you come to the market and then you see if things align or not, right? For a day trader or swing trade strategy. Now, in this example, to show you how the script works, I'm going to come in as a day trader. I know this without even looking at the chart. Now, as a day trader, that means I'm going to be working with smaller time frames to get my information so that I could form an idea. I start with the hourly time frame, and then I'm going to use the 1 minute to take the trade. So the hourly time frame is where the idea originates. And the 1 minute time frame, the smaller time frame, is where I'm going to trade the idea and define my risk and my profit potential, right? If you were going to do this as a swing trader, and I explained this like the week before, you would use a 4 hour time frame for your action time frame, or maybe a 1 hour, and then you would use like the daily or the 4 hour for your information or your context, right? Your trade origination, like we're going to do now. All right, just wanted to throw that in there. All right, so as a day trader, first thing I'm looking for, as you guys know, I repeat it every week, 2 components: trend, support, and resistance levels. So trend, the Trade Scanner Pro tells you trend. It can tell you, right? It tells you, but you can't always go by that, especially with the larger time frame, because the Trade Scanner Pro can't detect certain things. Certain things you have to still do the work for, but it's not that hard. Now, I'm looking for lower highs, lower lows, or higher lows and higher highs. This is pretty straightforward right here on my hourly chart. This is a break of support over here, and this is bearish, lower low relative to these lows. I mean, it's even relative to this low. This is a lower low. I think it's safe to say, and I think we can all agree, that this trend or momentum is bearish, right? The general momentum here on this hourly chart. So that is going to shape how I use the Trade Scanner Pro. I'm going to be looking for shorts. Now, that's trend, right? That's one side. But what about support and resistance levels? Because that can also be a major factor here. I don't want to short into a support exactly, So let's see, where are my support and resistance levels? Let's look back a bit. Now, I have a support around here somewhere, right? And when I look for these levels, I'm just looking for major reaction points. Some people call these pivots. You can call these a lot of things. All I'm looking for are reaction points where there were large movements off of. And we can see this after the fact. So for example, this movement off of this level right here was pretty sharp. I think we can agree. In fact, we can measure that. And how big was that movement? That was like 3,800 points. Okay, pretty significant compared to something like this, which was, what is that? 1,500 points. So that's like less than half. So I would regard this level more important, really, than this level. But if we look earlier back, there was a pretty significant move off that level. So that would count there. I'm just showing you the size of the movements so that you have something to compare to. Now, going back again, what other levels? Let me see what other. And notice I'm using the horizontal line tool. I'm not using the trend line tool for this because I'm interested in support and resistance levels and horizontal lines going back some period of time. Now, I don't have to mark all of them on the chart. I just want the ones that are close by and relevant. So basically, like this one up here, I really don't need this one up here because we're not going to be dealing with that for day trades. All I have here are these two. Okay, this one's support, which we came off of, and it looks like we're entering into this old support potential resistance area. Now, also, I can look at some minor ones like this for day trade purposes, right? So I will consider these two as well. That was an old support right there. And actually, that's kind of relevant to this level back here. There's some relevance. Usually, these levels will overlap over time. That's why it's worth projecting them forward. In fact, support and resistance levels are much better information about the future than anything else because they give you reference points to anticipate a particular type of behavior. Now, whether that behavior transpires or not is another story. That's up to the market, and that's up to confirm that. But at least we have an idea of what to anticipate. So here we are. We have a general bearish momentum situation, and we are fooling around at a resistance on the hourly. Okay, good place to look for shorts. All right, looks like we're kind of pushing through that. All right. Usually resistance levels reject pretty quickly. I don't see any rejection yet, but all right, so we'll keep this in mind. The next level is going to be up here. So that's it. That's my plan. I know I want to work on the short side. I know I'm looking for shorts, and I know I'm at a resistance level. Now, how is that helpful? Is if I was fooling around over here when the candle was over here, that's not exactly a resistance level. So that might not be the best place to go short, right? I'd prefer to short at a resistance. I'd prefer to go long near a support. Now, since our momentum is bearish, supports are likely to break and resistances are likely to hold. Okay, see, it's kind of hesitating here. Maybe, maybe not. But that's the idea that we go in with until the market proves otherwise. All right, so that's the plan. Looking for shorts. Would you guys agree? Yes or no? You guys can tell me, you guys could give me a completely other analysis. I'm not gonna, yell at you or anything. It's good to compare ideas. So these lines represent the lines that I drew on that hourly chart. This is my 1 minute, right? And I'm looking for rejection here. I'm looking for resistance. Okay, cool. So I have my plan. This is where I go to the Trade Scanner Pro. Now, my Trade Scanner Pro, I got to turn these on. When you subscribe to this, by the way, you got to turn these settings on. You have to go to your settings panel and make sure trailing stop, show previous trades, and heads up. Turn those on. Now, if you notice, the trend here says bullish, and it's seeing that because it's looking at this recent movement. It's only looking at this little recent momentum move, but I'm at a resistance. So I don't exactly want to go bullish here. I'd rather go bullish if we were above all of this resistance, right? Then that would make more sense to wait for longs. The other thing is, how long has it been since I've gotten a signal? This is my most recent long signal, and that was a while ago. That was like over 30 minutes ago. So I'm not going to sit here and wait another 30 minutes or whatever for another trade. And before that, I mean, you had a signal over here, a short which failed. That was at what time? 1439. So 1439, and this one was at, so almost an hour went by between this signal and this signal. That's a 1 minute time frame. So for purposes of this example, I usually have to show smaller than 1 minute time frames in order to see a trade. I don't recommend these smaller time frames for beginners because they can be extremely confusing. As a beginner, you should be thinking about 5 minute, 15 minutes, something like that, even for day trades. So I'm going to now go to a 15-second chart because that's the only way I can show examples in real time. Otherwise, I have to cherry pick like all the other frauds on YouTube and then, oh, look at this trade was a winner, right? And then record and then upload and then fool everyone, right? But I'm not doing that. I'm showing this in real time so we can see how the trades develop, how I come up with the idea and how it develops. Now, again, this says bullish, but I'm in a resistant area. So what do I have to do? This is a little more advanced. I have to switch to counter trend mode if I want shorts. Now, notice I switched to counter trend mode. There's a short signal that's in play right now. If you notice here too, this blue line, I'm going to erase the resistance line that we drew because that's going to be confusing with this blue line here. This is the entry price. We're way above that. I'm not touching this thing. So just because a trade signal shows up, look, this is getting stopped out. Just because a trade signal shows up doesn't mean you jump in and take it, especially on these time frames, like a 15-second chart. So there's a lot of noise and these things can get stopped out a lot. So there's nothing for me to do here. I'm just going to sit here and watch this thing. Notice also all these red columns. These are heads up columns. They come from these orange candles, which is the heads up candle. That lets you know that a signal is likely to appear in the next 3 to 5 candles. That's why it's called heads up. It gives you a heads up that a signal is nearby. Now, it doesn't guarantee a signal is coming, but it at least lets you know that one is coming. And you can set up notifications on TradingView so that you get like an email or something when you get a heads up or a signal or whatever. Now look at this. We're going straight up to this resistance over here. All right, cool. No problem. Now I'm going to wait for a signal. So far, nothing, right? I was able to avoid getting caught in this one. Now I'm going to turn on is this thing turned off? All right, hold on. I gotta turn this thing on. All right. And all right, so I got my paper trade thing set up here. Now this is on paper. This is not real money. I need to make that very clear. And I do this again on paper. This is not the best time of day to do this, but I will be doing this with real money once I figure out the exchange that I want to use. And I have more to say about that here in a moment. I have a trade coming up here though. So let's see if we get the signal. There's the signal. I'm going to take it with 2 contracts or 2 coins, right? Because this thing moves quickly and let's see what happens. Now, again, the momentum right now is bullish. So I'm fighting that short-term bullish momentum, but we're at a resistance in something that the bigger picture pointed out as bearish. So let's see. Typically, these trades can be tricky, and I can get stopped out a few times with these, especially since this stop is so tight. This stop is, what is that? 176 points on a 15-second chart. Well, that's kind of big for a 15-second chart, but that's the way Bitcoin's moving. Right? That's my risk. It's defined by the script. That's where I should get out if I'm wrong. And you have to make sure you respect the stops because this thing may run up another 500 points. I don't want to get stuck in that. If it touches the stop, I blow it out, take the loss. Okay, very simple. My profit objective is defined here. That's it. Okay, so it goes to one or the other. And it can be tricky where it may get near the stop, it may almost touch it, blah, blah, blah. Let's see what happens. Now, if I get stopped out here, I'll just wait and see what happens and see whatever. Okay, this is a nice candle. I'm getting another, it went through the blue line again. I'm going to add to this because usually when it gives you a signal and almost stops out and then goes to the entry price again, often that's a time that gives you an opportunity to add. What I showed you here, this is very advanced and can get you into a lot of trouble if you don't have a lot of experience. So I wouldn't recommend that, but it's good to see. And if you want to paper trade and experiment with it, you can do that too, as long as it's on paper. That's what I would recommend. If you sign up for the Trade Scanner Pro, I would recommend that you paper trade for a little while. You have a 2-week free trial. You can paper trade at least for a week, at least. to get a feel for it and follow what I'm showing you here. If you use this thing incorrectly, you will not make money. I can guarantee you will not make money. Okay, so I'm going to cover one quickly because this is a 15-second chart. I have a little green on it. Well, let's see if I get a green blip, I'll get out. How about that? As long as I'm getting red candles, I'll stay in. Oh, there's the green blip, but it's got to close. So I can wait 15 seconds. Oh, see that? Oh, well, very erratic. Now it's back to break even. All right, forget it. I'll hold on. See, that's what I mean. Like, you notice I was preparing to get out of one because I know how this game works, right? Even though we weren't at the profit objective, I'm like, I have a bunch of it on. Let me take something off. Let me reduce my risk a bit. But see, wouldn't even give me the opportunity to do that. Now it's going against me. All right, let me prepare to get out. Let me prepare. I got 4 contracts. That's 4 coins. That's a lot. I would never take that with real money. Okay, so let me mention a couple of things here. This is a practice account. It's a future. It's for the perpetual futures. I have 4 coins on, but if this was real money, I would probably have a fraction of Bitcoin, like maybe, you know, a 16th, maybe 4/16ths, which would be a total of 1/8 of a position, something like that, because each position that I take would be 1/16th, right? Or something like that, or 1/32nd worth of Bitcoin, because you can buy fractional portions of it when you're dealing with the futures, right? The futures exchanges. And I would be working with a $1,000 account. That's the idea. Something like that. Not this. This is a practice. Now, this practice account that I have here, I set it up for $1,000. I'm over that now, whatever, but it doesn't matter. It's practice. But the point is, in a real money account, for my $1,000 thing that I talked about, I couldn't afford 4 coins. Even at 100-to-1 leverage, I wouldn't be able to afford 4 coins. And I don't want to use 100-to-1 leverage to begin with. I'd probably be using 20-to-1. I mean, the exchanges that I've messed around with only offered 20-to-1, first of all. And other exchanges I saw like 100-to-1 was available, something like that. But I want to keep it around 20-to-50. All right, this doesn't look good. Again, this is very dramatic on a 15-second chart. This candle can turn right around just as quickly as it looks like that. So I can't overreact. Either it goes to the stop and I bang it out, or it stays in play and I manage to hold it. That's it. Those are my only choices. The Trade Scanner Pro simplifies my decision-making process. That's the whole idea. And yes, it sucks when you lose money, right? Like here, it looks like when I get stopped out. The trailing stop looks like it started here, right? That's the yellow line. But it hasn't really reduced my risk by much because the trade hasn't been in my favor for very long. The whole point of the trailing stop is to hold on to the trade longer than I normally would, but the trade has to go my way. This isn't going my way. This thing is strong. All right, so all right, bang out, bye. I tried. This thing is strong. Something that's weak should not do this, okay? So I'm going to keep that in mind. We're back to this resistance. I may get another signal. I'm going to prepare, right? I'm getting my warnings. Remember, this is very fast price action. So we're going to see a lot of signals. We're going to see a lot of stop outs. I mean, look, 1, 2, 3 signals. This one was worth a little bit, and then it got stopped out. Okay, I'll try one more. If I get the sell signal, I'll try one more. And if that stops me out, then I'll hold off because we may be continuing. This thing may just be reluctant, and I don't want to continue to fight it. Right now, I'm in counter trend mode. Let's wait for the signal because we got the heads up. So a signal will be appearing very soon. And I'll try one more. That's also a double top, by the way. But on a 15-second chart, there's the signal. Now let's see if this candle can stay red. All right, that's green there. All right, I just shorted it. 2 contracts again. Oh, the signal vanished. Oh, because the candle got too big. Right, that candle had to stay a certain length, and it got too big. All right, I'm in now anyway. There was a signal there, and it vanished. What am I going to do? Let's see if there's one on the 30-second chart. Is there? Yes. Oh, look at this. There's a bigger short signal here, which looks like it's going to get stopped out. That was called back here on a 30-second. All right, so that's only 15 seconds higher. Now, you could be jumping time frame to time frame looking for signals. You can do that as long as you know what you're looking for, right? And you're aligning it properly. because if you're just going to jump time frame to time frame looking for random signals, you're going to have problems. You can't do that, right? But there happens to be a 30-second signal here that's in play, right? I shorted the second time on that 15-second signal that vanished, and let's see if this thing stays intact. I like this candle right here. It's a good looking candle. I'll short more if we break below that blue line. Again, it's advanced. And why am I doing that again? Because I got banged out on the first one with 4 contracts. So I got to see if I can make that back. But again, it's up to the market here, right? The market needs to go below that blue line for me to do that, to add to it. Now, so I was saying with the real money, it would be $1,000 account, and I'd be working with fractions of a Bitcoin. So there we go. A nice profit would be like $30, $40. That would be a great profit, because $30 or $40 on $1,000 account is 3 or 4%. That's all I'm looking. If I can get that in one trade, that's a lot. You have to have that right mindset. If you're one, well, I'm going to make 200% on every trade, have fun, man. You're going to lose all your money. That's all I can tell you. All right. I guarantee you will lose all your money. Now, all right. So this one's working. This time I'm not going to be stupid. I'm going to take one off early. If we can get at least, come on, you got to go at least to here. You can do it. Come on, at least, right? At least test the low. If you're going to be weak, remember, I'm looking for shorts here. If this thing is going to be weak, weakness usually unfolds quickly and has no problem tapping lows like that, right? No problem. It shouldn't fight and hesitate, and it shouldn't do that. So if it's fighting and hesitating like this, not a good sign. That's not weakness. All it is noise, and I keep shorting it, right? Like it shouldn't be doing this. So anyway, let's see how that goes. Right now, while we're waiting for that, so I'm explaining the Bitcoin real money situation. Someone here a week ago suggested some exchanges, which I looked into, and there were 3 exchanges mentioned. I looked into 2 of them. Femex was one of them, and I could not. Femex kicked me out. I couldn't. No, this isn't working. Femex was not open to U.S. traders. Right, that's the message I got. So I couldn't. I couldn't open an account with them at all. I couldn't use them at all. So that was that one. And then so there was a recommendation for one called WeX, and I looked into that one. WeX looked promising. Okay, it was open to U.S. residents. There was no KYC requirement, all this stuff, no VPN required. Okay, cool, right? And I had Steen look at it. I said, hey, Steen, take a look at this. What do you think? He came back with red flags. If Steen comes back with red flags, it's no good, okay? Because if anyone knows what he's talking about, it's Steen. And he's very detail-oriented, and he found some stuff that I overlooked, and he said there were complaints about people getting locked out of their account. So Sam, there you go. Sam is the one that made the suggestion. Yes, Steen said that he found some complaints that people were getting locked out of their account for WeX. Because I was liking WeX. I'm like, okay, I think we found one here. And then he came back to me with that. I'm like, forget it. I've one red flag like that, I'm not going to recommend them to anyone. So I'm mentioning that situation here because that's what Steen told me. And I give him a lot of weight. Okay, so Sam, I really appreciate the suggestion because they were very the platform looked nice. I was happy with a lot of other things that they had going on. I was very happy with the fact that they were open to U.S. residents and that there was no KYC requirement. I was like, okay, cool, we got something here. They were based in Singapore. I'm like, okay, I can deal with that. But then Steen said no go. So now Blowfin, I have not researched yet. That's the one that so I'm going to look into them next. I know that was your other suggestion. That was because I mentioned there were 3. That was the 3rd one, and I haven't looked into them yet. So I'm going to look into them next, and then if I'm liking them, I hand it over to Steen, see what he says, and if he goes with it, then we have ourselves something. Because look, I was very the general idea of WeX, just as far as their platform goes. All these platforms are pretty much the same, but I was okay with all of it. I liked it generally. Like they seemed decent. Their costs seemed realistic for day trades, and I looked into all that stuff. Like that, some seemed to work out. But when I saw that complaint from Steen, I was like, all right, no good. All right, because I don't want to steer people into that, and then I got people telling me that they're getting locked out of their accounts. You know, I'm not one of these frauds that steer people into FTX. You know what I mean? So that's why I like to do my homework before I show something like that. Because even if I'm not an affiliate and I show their platform, people are going to sign up for it. And I don't want people signing up for something that is going to get them into trouble. All these platforms are high risk, but when we find something like, if he finds something like that, that's all I need to see. All right. So anyway, I'm going to research that third one that you suggested, and I really appreciate that suggestion, because now I can look them up, and if they fit the bill, then we'll have some. Because the main thing I'm looking for is a place that can open up U.S. accounts. That's the main thing. That's the first thing. The second thing, the costs have to be realistic, and then we have to. The third thing is the scam report. Like if there's anything scammy going on, then it has to get through that. If we can get through those three things, then I'll feel comfortable putting money, opening an account and putting real money in, and then trade, using these trade examples with real money. I just don't want to use someone that, is going to be problematic. All right. I think I've repeated that enough times. So Samuel, again, thank you for those suggestions, because even though WeX wasn't a go, it was still a good thing to look into. I never heard of them otherwise. So that was good. Anyway, like I was saying, all these platforms, they're very similar as far as their order entry goes. They're all formatted exactly the same way. They all use like a trading view chart, and they all have the order setup it's all the same, right? The sliders for the leverage and all that stuff. I suspect that many of these companies are just white labels, which they're all using the same market maker. They're all using the same company to match the orders and for the trade process. And they're basically, the company is just putting a website in front of it and basically acting as a marketing agent and just bringing business to a market maker. And then they split the profits, right? Because obviously the market maker is going to be taking the other side of your trade. And I would imagine they work out some kind of deal, right? That's what it looks like to me, because all of these platforms, BitGet, Femex, all of them, all these centralized platforms, they look exactly the same. So I suspect that there's something like that going on, but I don't know exactly. I don't know for sure. But I know, like in the Forex world, especially in the prop firm world, they operate like that. Like, well, they'll have they have like a technology partner who's the market maker, and they provide all the technology, the account setups and the account management and all that stuff. And basically the company, like if I opened up my own prop firm, I would just be like a marketing agent or like a referral, like an affiliate. And I would just send traffic. Oh, got to get out of this. Okay. This thing is strong. Okay. Strong. We should not be behaving like this at resistance levels. Okay. So, all right. So if that's the case, let's reevaluate here and let's take a look. What is going on here on the bigger picture? So far I was wrong about being short. I mean, looks like, short was the thing, but we're not rejecting this resistance so quickly, and we should be. So, but we also haven't cleared through it dramatically as well either. So it's still a location to consider shorts, but what I will have to do right now, if you find yourself in this situation, which can happen regularly, especially on small time frames, what you do is, instead of keep getting in front of this thing and fighting it, which looks like I'm doing, what you do is you have to wait until the momentum turns, right? Which means you have to wait for this thing to become a short. So right now I'm in counter trend mode. That means I would have to turn counter trend mode off, all right? And all those trades go away, as you can see, because I'm no longer in counter trend mode. And I have to wait until this thing becomes bearish and wait for sell signals. That's the more conservative way to do this. Now look at this. I'm looking on a 15-second chart here. There was a buy signal right here on this. Looks like it might have been worth something. But that's the only way to really go about this. Like I either wait, I start taking shorts from this location only when this thing turns. So that's really when you're waiting for a lot of confirmation. You're not going to get the best price. Counter trend mode gives you the better prices. But when it doesn't work, you get stopped out over and over again. This is the resistance. It should not be behaving like this. So in order for me to believe that this thing is going to really start pulling back or that resistance is going to stick, we need to at least start challenging some of these minor support levels, at least. So that's what having a rule like that will prevent you from continuing to fight it. I fought this thing. I took 2 trades. They both tapped me out. All right. Not going to take a third one. I'm not, at least not the short. The short is going to have to prove itself now. And sometimes, maybe this is the short. Maybe this is the one that breaks, and I could have had the better price, but I'm going to wait for the better price. Let's see what happens. And like I said before, this is usually not the best time of day to be doing this. All right, stock market's closed. Bitcoin is doing whatever, but the fact that we're still fooling around at a resistance has not changed. And the fact that the bigger picture, the 1 hour chart, is still not exactly bullish. This is more likely to make a lower high, not a higher high. This thing would have to go all the way up here to start saying bullish on the bigger picture. We need to go up there. We need to start breaking, or this thing needs to form the lower high, then form a higher low, and then break, right? It's got to do something like that. This can easily turn into a lower high. And if you have a lower high in the context of a bearish environment, then a lower low is likely to follow, right? So, all right. This is the 15-second. Yeah, we can take a look at a 5-second. Has that changed yet? Even the 5-second is bullish. Look, it's the 5-second. This is a ridiculous chart. You're going to get lots of signals on this chart. It's calling longs. I wouldn't go near this thing. But if this thing turns bearish, that's usually where it starts, right? It's always going to start on the smaller time frame. Also, look at the structure: lower high, lower high, lower high. So maybe it's beginning. So I'll go back to my 30-second. Nice pullback from that resistance. Is there a, let's see, counter trend? Was there a trade up there? Probably there was, right? Let's see. Of course there was. All right, look at that. So maybe I'll work with this if maybe we retest the blue line. So notice, I'm not blindly taking these signals. I'm using some of my own thought process to help, decide how I should manage these or not. That's on when you're getting into the trade. Once you're in the trade, your job is done. It's up to then either go to the stop or you go to the take profit. Bitcoin makes some strong moves at those times, right? You should go, well, yeah, you know what, Stam, and there's a reason for that. It's because that's a stock market time, right? 8 a.m. to 8:30. There's often news, U.S. news at that time. Like that's when CPI comes out, 8:30, PPI comes out. Other news items often come out at 8:30. Then you have the 9:30 stock market open. So, and Bitcoin is highly correlated to the NASDAQ. So that's why you see a lot of volume and a lot of movement at that time. And yes, that's a very good time to stream actually, because that's when all my competitors stream. There's a number of people that I follow. I may try this. How many contracts do I have there? 4. I don't want to take 4. All right, I'm going to take 2 on that lower high. This is, by the way, this is way below the entry price, but that's why I went a little. I'm going in with 2. Let's see what happens. But the 8:30 time slot or 8 o'clock time slot is when all the fake gurus are out streaming their their market, whether it's their analysis pre-market or they trade the first hour or whatever on their prop accounts or whatever, right? Like that's when they're all out doing it. So I am considering the idea. I would probably be looking at other markets though, but maybe, we'll have to see how it goes. Usually like at that time, 8 o'clock, 8:30, 9 o'clock, the NASDAQ is all over the place, right? The S&P, that's like the prime time for those markets as well. And that's why Bitcoin moves. much more dramatically and smoothly than this time. So that is a time to trade Bitcoin at that time, for sure. Usually US market hours from about that time, 8 a.m. up until about 3 p.m. is usually a good window. Also, the London Open is usually a decent time. 3 a.m. Eastern time, something like that. Usually a decent time for Bitcoin, because again, it has to do with that market, right? You have the volume from that market. Sometimes Asian session you can get stuff, but that's when the volume is low and it can be very very hard to trade because of those lower volume situations. But if there's some news, sometimes at 1 a.m. or whatever, you get like a move, or 12 a.m. I've seen them. But that's usually into the Asian session, right? Asian session here starts at like 8 p.m. Eastern time. Man, this trade sucks so far, but I got in early. This is really where I should be considering the entry. But all right, look at that. Nice little rejection. Okay, try it. Let's see if this can keep its act together. That's a lower high. Let's see if this thing sticks. All right, now this trade is somewhat maturing. Look at the trailing stop. The trailing stop has reduced the risk in this trade somewhat. Right, the original risk on this trade is 173 points. For a 30-second chart, that's not bad. But the trailing stop has reduced it to 100 points. All right, that's the whole purpose of the trailing stop. Sam, by the way, how have you been doing with the Trade Scanner Pro? I know you've been like a user now for some time. What would you have to say about it? You don't have to say something good just because whatever. If you have something not so good to say, hey, that's cool too, because that helps me make it better. All right, so don't worry, I won't be this thing fucking. Oh, sorry, I'm using bad words here. To keep this clean. This thing sucks. All right, and I'll just ask you how, why does it suck, and then I can, it's good feedback for me. All right, this is looking good. Okay, so maybe I have an opportunity to lock some in early, like I've been wanting to do this whole time. Yeah, well, remember I took that original short that I took was here. So I have been using it during 8 a.m. and that is when there are good trades. Okay, well, that really has nothing to do with the Trade Scanner Pro. That has to do with the time of day and the volume and market environment. Using the Trade Scanner Pro like at the worst times when there's no volume, it doesn't matter if the tool is good or bad. You're not going to make any money, right? So, all right, I'm going to blow out a sum here. I'm going to buy 2 back. I bought it a little early, bought them back a little early because we're not exactly at the profit objective. But now I want to see if we can let the winner run. This is really how the Trade Scanner Pro, if it's going to make you money, this is how it makes money. It helps you stay in a runner. A runner is where profits come from over time. Now, the Trade Scanner Pro is automatically set for 1.5 to 1 reward risk to at least give you something. But the idea, though, is to capture 2 to 1, 3 to 1, 5 to 1, 10 to 1, if it can get that far. Now, of course, those bigger numbers are going to be much less frequent, but I've seen them. We've done it on these streams. The market has done it where Bitcoin does something stupid, right? And my risk is like 30 points, and then I make 300 points. That's 10 to 1. That's happened. But again, that occurrence, I can't forecast that. That's the random nature of the market. The market may do it, it may not do it. The thing is, I'm not sitting here wasting my time trying to figure out where the market's going next. All I have to figure out is what is the tendency, meaning, the short tendency is what I'm trying to work with here. I got some confirmations. One is working a bit. Now let's see how far it can go. That's it. Sometimes they're not going to go very far. Sometimes they're going to go far. And anything in between. Markets are random. So the Trade Scanner Pro is developed with that in mind, the random nature of the market. All these other people that sell all this software, I know I rant a lot, but they mislead a lot. I mean, one after another, they're all saying the same thing. This thing forecasts the future. This thing, is going to tell you, this thing is going to get you in at the best price, in and out at the best price. That's all it's all lies. It might randomly, but it's not going to do that consistently, because there's no way you can build something like that with the limitations of these platforms. It's just not possible. So, but you can build tools that can give you some guidance and help you manage things better and help you capitalize on the random nature of the market. Because again, we're not trying to forecast anything. All we're trying to do is stay in the trade longer and have some visual references to help us do that. That's what the trailing stop is for. Now notice, I'm going to erase these blue lines here because that was the resistance area that we had noted from earlier, remember? Look at the trailing stop now. So remember, my risk before was 170 points and then it was 100 points. My risk right now is 20 points. If this thing pops all the way back up here, which it can do, I'm losing 20 points. Actually, I'm losing less than that now. The trailing stop just popped. It just tapped a little lower. The trailing stop moves on the closing prices. So the candle has to close. Sometimes the trailing stop will jumble around a bit. When the candle is like fluctuating, the trailing stop will fluctuate a bit, but not dramatically. So sometimes you'll see it kind of move funny, but that's a software thing. I wouldn't even know how to fix that. But it's not a big deal. Now look at this, right? So the trailing stop is now below my entry price. So this trade is theoretically risk-free. If the next candle goes straight up to this thing, I'm out and I lose nothing. Plus, remember, I closed that earlier profit, so the trade is actually net green at that point. This trailing stop is just, I never changed the setting on this. It's at regular. That's a good question, Sam, because you could change this. We made this function available where you could make it very tight or very loose. That's going to depend on your own personal preference. But I keep it on regular. There's really no reason to set that. Unless you're in a really wild market or something, and like Bitcoin runs 1,000 points in like a minute or something like that, and you want to keep your stop really tight because you want to capture a lot of it. Maybe you could switch in situations like that. But I never switch that setting. We just put it out there for people that might want that flexibility. Or maybe sometimes the market needs some room to breathe. So again, that trailing stop is too tight and it always stops me out. So you can make it loose and it won't be so sensitive. And it can help you stay in trades longer. Something like that might be helpful for you're trying to capture a broader move. So let's say, for example, you've determined on the hourly chart that you're at a major support level and that the potential from that level is pretty big. And you want to try to stay in the trade and try to get around the noise that can happen as the trade starts to mature. Something like that would help you. You loosen up the trailing stop and it opens the possibility of capturing more of the move. But it can work against you as well, right? So that's why it's a more advanced feature. And I don't even really use it because I'm using this, especially on these time frames, I'm not looking for gigantic moves. I'm just looking for a move that's big relative to this time frame. And that's what all this order information tells me. Everything here, the stop, the profit objective, it's all relative to the price action on this time frame. And I'm on a 30-second chart. If I'm getting signals, for example, on a 15-minute chart, these orders are going to be very wide because 15-minute candles are much wider than 30-second candles. So instead of a 170-point stop on a 15-minute chart, I'm probably looking at a 1,500-point stop. So it's important to realize that. That's why that's more appropriate for swing trades. And of course, you'd have to work with smaller size. Otherwise, you're taking enormous risk. But the nice thing about the Trade Scanner Pro is it defines everything for you. And at this point, you let the trade run. There's no more thinking. And I'm showing you this as a guy sitting in front of the computer. Really, ideally, what you want to do is you want to use your notifications from TradingView like this, okay? And you can set the Trade Scanner Pro. You just select it over here like that. And then you can just create a notification and you can tell TradingView how you want to receive that notification, whether by email or whatever, SMS, whatever. And then you could go about your business And then you come back, it'll tell you when a new signal appears, it'll tell you when a heads up appears. So at least you don't have to sit in front of your computer. That's the best way to use this thing. Do you use it like that, Sam? I'm curious. Or do you sit in front of the computer? You could do both, but I think for beginners, it's great to use those notifications. All right, so I'm so glad to see that this trade is working after getting stopped out 2 times. Okay, look at my trailing stop. Now we're beyond the entry price. So now this is a no risk plus, I should be, this trade is a win no matter what, as long as I respect the trailing stop. Eventually, the trailing stop will reach the profit objective. And if the market keeps going, that's when I start to really capture some profits. Now, I have 2 contracts. I'm going to lock in 1. We're beyond the profit objective. I locked in 1. Now I'm going to let this one ride. I sit in front of the computer. Still new. Oh, okay. Okay, no problem. Do you only trade Bitcoin or do you trade other things? But good to know. Anyone else have any questions? So this is a good example because you saw how the market was giving me a hard time here and here, but I was right, wasn't I? We were right, weren't we, with the short, right? Because now it's working. That resistance that we identified earlier eventually rejected. Look, the hourly. Eventually, I erased those 2 lines. Remember those lines that I had over here? Remember those? They were like this. I erased them because it was getting confusing on the other chart. Remember those? We rejected. This is what should happen at a resistance level. And the Trade Scanner Pro confirmed we had a couple of signals there. 2 of them stopped out, and eventually it rejected. And you say, well, is there any way you can filter out those stop outs? Well, we're working on it. We're working on it. The problem is when you make it too sensitive, then it filters out everything. And then the only way to capture something like this is you have to wait until this time frame turns on here, up here. And look, we're still bullish. It hasn't even turned bearish yet. Okay, so it's still behind. That's something we can't really change when you're looking for these counter trend moves. So the level is what clued us in to switching to counter trend mode and to look for this to begin with. Remember that? So we identified what we were looking for. We knew we wanted to look for shorts. We found a resistance level. Price was then fooling around a resistance level. We had to switch to counter trend mode in order to get short signals at this resistance level. Counter trend mode will give you the better prices. Because again, if I was waiting for the market to turn and give me a short in terms of momentum, we're not even there yet. This thing is still not going to generate short signals yet because this up here has to change, right? And I've locked in some profits along the way here, and we haven't even turned bearish officially yet on this 30-second time frame. Now, if I go to a smaller time frame, like a 15-second, we're probably going to find a bearish. Not even. Look. You probably have to go to a 5-second. How about 5? See, 5-second is bearish. See that? 5-second is bearish. So it takes a while for it to change, but that's part of it. Like if you want to be more conservative, you wait. Otherwise, you're gonna have to deal with getting stopped out a couple of times. Now look, we have a higher low over here. We're turning around a bit. All right, but now we're flirting with the profit objective. I've locked in 3 of my contracts, so I only have 1. So now I'm just playing with profit. So now I can afford to be flexible. What am I going to do? I'll let it run to the trailing stop. If it goes there, I get out. All right, so I give back some profit. At least I locked in some around this area, this lower area here. Okay, let's see what happens with that. Now, if it goes to the trailing stop right now, how much am I making? 192 points. If it goes to the trailing stop right now. And my original risk was 172 points. So that's pretty good, wouldn't you say? Right? 192 points. That's not even 1.5 to 1. Now, at 1.5 to 1, which is the standard, that's 264 points. I locked in my third contract around here somewhere, so it was a little bit more than 1.5 to 1. Here we are with a lower, this was a higher low, turned into a lower high. That's exactly what I want to see if I'm short. This can be tricky if you're long, oh, higher low, let me get low, and then it turns on you like this, right? Again, you got to be careful with that. But we have lower highs, right? Lower high, lower high. Okay, we should make the lower low at least. So let's see. And I'm still short. Now, another thing we can do is we can say, well, how far can this thing reasonably go? Let's take a look at our bigger picture. Let's go back to our hourly chart. Now, do you see how I used the hourly chart to come up with this idea to begin with? And how I used it not to go long because I was anticipating a lower high simply because of this structure. Do you see that? Like that should not take a lot of experience to figure out. Like that, this is not, you don't need 2 decades of experience to know that. What you need a lot of experience for is the confirmation. Okay, but to come up with the idea, to recognize the short potential shouldn't be that hard. Now, if you find it hard, tell me, because I'll talk more about it. Now, what is a reasonable scenario for this to go? Well, we have support here at, what is this? 94,100 area, which, man, that would be a huge home run. We're at 94.7. 94.8, that would be huge, right? I'm not going to sit there waiting for that. But that's one area to consider taking profit. If it runs there and my trailing stop keeps me in that long, at some point, I mean, if you're at an extreme low, you might as well take the money. Because if you're at like 10 to 1 or 15 to 1, those are very rare. Take it. So what if it runs to 20 to 1 this one time? If you're getting 15 to 1, just take it. If you let greed, oh, you left money on the table, man, you're going to have a hard time in this game because leaving money on the table is part of the game. All right, so we have this low over here. What is this? 94.062. Okay, so basically the 94 even area. Theoretically, this thing should test, if this thing is weak, it should test this low. But not right this second. It may take 30 minutes to an hour to do that. So just something to keep in mind, right? This is where we get our perspective from. Now, this also may produce a higher low somewhere in here, typically around here somewhere, okay? Like around here. It may produce a higher low on smaller time frames. If it does that, I don't want to see that as a short. So that would prompt me to get out, or if my trailing stop gets touched, I'm happy to get out. Okay, if I see a situation like that, because a higher low on the hourly may mean this thing may be turning, it's going to attract buyers. And at that point, I'd want to lock in my profit. Now, sure, it could be a fake out, but how much risk you want to take, like I'm giving back your money, that's going to be up to you. But I would take the money off the table if I saw a clear sign like that. Okay, so we made the lower low slightly over here. All right, I'll let this thing run with the trailing stop. The trailing stop is now going slightly beyond my profit objective. All right, so it's slightly beyond the 1.5 to 1 reward risk. Now I could lock this thing in right now. Let's see, at the bottommost point, what was this thing worth? Let's see. 510 points. If I had locked it in here, but I'm still in, right? 510 points. I risked 170 points. And there was 510 point potential. And it may test it again. That's pretty good, wouldn't you say? So the Trade Scanner Pro is what helps me capture that. I don't know if it's going to go there. I had no idea when I entered this that it would run that far. No clue. But I was able to stay in and give the market a chance. All I knew was that the short was more probable because of the location and the momentum. Remember what I said before? Trend and momentum. Do you see me looking at any news? Do you see me looking at any oscillators? Do you see me looking at all this other nonsense? No. Trend, momentum. Trend, levels. That's it. With that information, you're actually analyzing pure market information. You're actually analyzing what the participants are actually doing, not what you think they're doing. That's why you're better off just focusing on those two components. Now, you know how many times I say that? I say that on every stream, and people are still not going to do it because it's too simplistic, right? People don't like simplistic. They want something complicated. If I showed some kind of magical thing here with lines all over the place and this and that and whatever, and then it made a profit, oh, wow, I'm impressed. I want to learn that, right? And fake gurus take advantage of that. They overcomplicate things. They use a lot of fancy language, and you're like, oh yeah, I'm learning something. You could just summarize it to trend levels. Over time, if you stick to this game long enough, you'll come to that realization. I see a lot of these guys, not a lot, but I see some of these guys that have been in this game a long time, a really long time, and they all say the same things that I say. Less is more. Simplicity. They all say the same thing. All right, we got a little double bottom situation here, but it's a double bottom on a 30-second chart. I mean, how seriously can I take this? It may stick, but I'm not here to make these judgments. I'm using the trailing stop. That's going to be my exit. That's it. I can take my 500 points, whatever. We can do that, or we can let the trailing stop get us out. And here's the trade-off. By letting the trailing stop, I'm willing to give back some money to make more money. So maybe we go to the trailing stop, I have to give back some money. But maybe we break this low, and now I make more than the 510 points. So since I locked in some profit and I have the luxury of being flexible, why not? That's why I'm quick to take some profit off the table, right? And then when I have a runner, now I can afford to be flexible. Just let the market pay. The market wants, I'm willing to give back some to see if the market wants to pay more. I'm nicely beyond my profit objective. So, all right. I'm prepared to bang it out at the trailing stop. I don't have to get all wrapped up with making judgments like the double bottom. This may work, this may not work. It's completely random. Now, if this was a 30-minute chart, if this was a 15, 30-minute hourly, then I would take that much more seriously. Oh, double bottom, forget it, I'm out of here. As soon as I saw this candle, I'd be out of here. But not on a 30-second chart. All right, this thing can turn right here and turn red again, like in an instant. So it's up to the market. Trailing stop or not? What's it going to be? Looks like it's going to be the trailing stop. And the trade will vanish once it's touched. There it goes. Out. Respect it. Now, this may turn around and go in my favor and blah, 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 whatever. It doesn't matter. I'm out. All right. So if we look at some of these trades here, the account history, I'm accounting for commissions. I adjusted that a bit to make it a little more realistic. Before it was adjusted too high. So now it's charging me $5 every time, which is a little more what it should be for a futures contract. So let's go to the losing part here. So that starts around here. So 697. I'm going to ignore the commissions. 847. Man, that's a lot of money. That's like $1,500. Let's see how much money I made back. 220, 250. All right, so that's 500, 750. So I'm still net negative because I took, I guess, too big of a loss on those 4 contracts earlier. What am I going to do? But that's how it works. Maybe I could have been more patient, or maybe I shouldn't have been so aggressive with the size. But that's what happens. Hopefully in the next trade, I'd make all that back, right? So I'd say, so what was that? I made 750 and I lost 1,600. So I'd have to make back basically, like, to clear it plus the commissions, a clear 850, 950, something like that, which can be done if I captured another nice move like this. Does that make sense? So again, that's all on paper. It doesn't always work out this way or transpire this way. I've had plenty of situations where I've come out nicely ahead, and again, the main part is I still caught this area and I wasn't switching to go long. I wasn't fooled by any of that. This is still a short, okay? Until we start reaching some support levels at least, because we have a lower high, it's intact, price reacted, so there's some selling activity there. So now what I would be doing here is I shouldn't have to be in counter trend mode anymore, right? Because we have now I should be looking for trend trades. Now look, it called a long. Look at that. It called a long. I would not take this long because of the context. I would start looking on, what is this, 15? No, 30 seconds. Let's look at the 15 second. Do we have the bearish here? So 15 second turn bearish. See that? If I was conservative, this would be the first trade that I would be waiting for. If I was conservative. Remember, I'm off counter trend mode, which means I'm looking for shorts. If I was still in counter trend mode, this thing would be looking for longs. Not only that, but I have a heads up over here. So a signal is likely to appear soon. What time is it? Let's see. Oh man, it's 5 o'clock. All right, yeah, I'm not going to take any more trades. This is a really bad time to trade. It was nice that the market was even able to give this move. So anyway, but this is really, so if I was being more conservative, this is what I'd be waiting for. And look, I had to switch to a 15-second chart. This thing eventually turned, right? Turned bearish, and now I'd be waiting for that bearish signal. Now I'm aligned with the momentum on the bigger picture, and it's aligned on the smaller picture. Counter trend goes against that in order to try to get a better price. So it's more advanced, not something I recommend for beginners. It's harder to use, and you can get stopped out a lot, as you saw with my examples there. So this is really when I should be waiting. And plus, I mean, look at this. This if I got a signal around here somewhere, a short, that's a nice lower high. Makes sense. Look, I have this minor support area here on this. Hold on a minute. Is that 15? Oh, that's not a 15 second. That's a 15 minute. It's good to see that that's bearish though. Let me switch this to a 15 second. Oh, okay. Here, this is still bullish. I was going to say, well, that switched pretty quick. So there would be nothing to do here then. The 15 minute is starting to turn, but there'd be nothing to do here on this time frame because I want this thing to turn bearish. Right? After a move that we got like that, off that resistance, I want to see this thing turn bearish. What does the trade scanner say about the daily chart? Well, we can go take a look. I think it's bullish. Yeah, look, here's the daily chart. It's bullish and there's a long. Look, there's a long signal that was called on the daily chart back on this day here. February 25th, a long was called. And let's erase some of these blue lines. And this thing is against that long. Look at this, right? A long was called, but look at the stop. This is why I don't use it to take trades on the daily time frame. That's an 8,000 point stop, but that's where the stop is. You know, that's based on the recent price movement. That's where it calculates the stop. 8,000 points. I'm not taking an 8,000 point stop. Now, granted, you can take a much smaller position, right? But I'd rather use just a smaller time frame. But the profit objective on something like this is also very high. It's going to be way more than 8,000 points, 12,000 points. So that kind of gives you an idea. If you're looking for big moves, this is the kind of risk you're facing, right? So you have to adjust for that. Makes sense? So good question. So let's go back to my 15-second chart. Good question. So you guys follow me so far with this? Right? So do you guys understand like the aggressive and conservative way to go about this? Do you understand like why I would wait for this to turn short now before shorting again? Although I can go to counter trend, it's probably a signal there. Do you guys understand that? Because again, this can be very confusing. That's why I stream every week. That's why I try to show examples in real time like this, so that you could see like the kind of problems you're going to face and how to deal with something like this, as opposed to all those videos on YouTube that show, oh, look, here's some magical oscillator that you can put on your chart. And look, it calls 95% win rate nonsense. And then when you try it for real, you lose money all over the place. I'm trying to show you reality here. I'm trying to show you the tool and how it works in reality. And yeah, your experience may not be the same on the larger time frames, but what I'm showing you here, it's like watching it 5 times faster. So everything that the thought process, the things that I'm saying, this is the thought process you should have. But the luxury of the larger time frames is it unfolds much more slowly. So you can take your time thinking about these things. As opposed to here, things are constantly changing. And that double bottom, man, that double bottom worked out nice on the 15-second chart. Look at that. That would have been a nice long, but there was no signal. Anyway. All right, so if I don't have any other questions, it's 5 o'clock. This thing sucks around this time anyway. Not a good time to be messing around with this. I hope you guys got some value out of the stream. Again, if you want to try the 14-day free trial, I never went over the link, but this here, I'll show you real quick. You just go to the link in the description. It'll take you to this website. You simply scroll through here. Here's the information, right? You can click on this over here, and it'll take you to a registration page. And on that registration page, you simply put your trading. You have to make sure you put your TradingView username. If you don't, you're not going to get the invite. You have to make sure you do that correctly. And then it takes about 30 minutes to an hour to get your invite. Okay. So that's how that works. With the 14-day free trial, you have 14 days to cancel. Please do me a favor. Don't send me an email saying that you want to cancel. You can cancel this thing yourself. I got an email. You cancel this thing for me. I can't babysit, man. I'm sorry. Like, I know I don't have the greatest customer service. I apologize for that. But we set this up so that you can easily cancel it yourself anytime you want at your convenience, whether you do through PayPal or Stripe or whatever. It's easy to cancel. People do it all the time. So just wanted to mention that. All right, people, that's my complaint for today. So other than that, if you have any questions, you know where to find me. You can send me an email here on TradingView, a message on TradingView, or you can send me an email at markets. That's usually the best way to reach me, and all that stuff. All right. Also, if you get any messages from me unsolicited, or Steen or Alex or something like that, then most likely it's a scammer asking you for money. We don't ask you for money. So block the person, report the person, all that stuff, please, and be safe. Don't get scammed. It's very common. All right, so with that said, I'll leave you with that. You know where to find me, everyone. So enjoy the rest of your day, the rest of your evening, wherever you're in the world, and thank you very much for watching.